We have breaking news here at the FreightWaves studio. JP, big story. Donald Trump has stated, the White House has stated that tariffs for countries that did not retaliate against the original tariffs that Donald Trump implemented last night would actually have a 90-day pause to allow for negotiations. JP, this is a major, major news story. Obviously, the stock market is ripping. We're up 2,100 points on the Dow Jones, and the S&P is up 7% right now. I mean, markets were caught way off guard at how fast this is. Also, Donald Trump has announced 125% tariff on China in retaliation of the overnight tariff that they put on U.S. goods. I mean, this is a massive story.
It's a massive story. I was hoping for a resolution to at least part of this when I saw that heads of state from Vietnam, Japan, and Korea had called Trump immediately after he announced it with the big chart of all the tariffs. I was like, okay, hopefully, like these countries, they were into the Trans-Pacific Trade Agreement, sort of on our team, as opposed to being sucked into China's orbit. Hopefully, like they kind of get on board with whatever issue he's trying to get leverage on, right? And so, it looks like by pausing the tariffs against non-retaliating countries, he's kind of let those countries off the hook, because the retaliating countries are China, Canada, the EU, a couple of other ones, but not those other Asian trading partners.
Yeah, the Asian trading partners, which are incredibly dependent upon the U.S. for exports. They're also, for military and security reasons, have an enormous interest in maintaining relations with the United States. And let's just be clear here, Japan, Korea, or South Korea, Vietnam are not only dependent upon the United States for consumer products and consumption, but also for security. And they are not friends of China. Like, that's the whole thing, is they view China as an adversary, and it's in their interest not only to keep products flowing, but also to box China out.
Yeah, that's right. It's really interesting. I mean, these are countries that they recognize that China has like regional ambitions to sort of impose its trade regime on everyone in its sphere of influence, and they want to kind of resist that.
Road and Belt Initiative. I mean, Taiwan specifically is actually, without the United States, would not be a country, or whether it depends on how it is. It is a country by every standard, except certain countries don't recognize it. But it would not exist as an independent nation had it not been for is not.
And I think that the other point that's really important to make is that these sort of like countries, maybe we call it like peripheral to the South China Sea, are where a lot of supply chain and production operations have been moving over really since the first Trump administration.
Yep, absolutely.
When the first kind of like deleveraging from China started. And so if he would have followed up with like a really aggressive trade war against those countries, it would have been kind of like pulling the rug out from under a lot of companies that have been trying to prepare for this day, right?
Yeah, I think this is an amazing development, and it's one that I applaud. I have been very pro-tariff, but specifically on China. We've talked about this a lot on Bring It Home, is that tariffs on, the tariffs are important specifically on China. It is too much, like, in my opinion, it's been really quick. I think the fact that we are now targeting China specifically, I think that is a very different message. It will have a very different outcome, because now companies at least feel like there is some hope for having alternative supply chains. It has been my contention that putting tariffs on every single country, particularly punitive tariffs on places like Vietnam, Korea, Japan, which we need as partners, was not in our interest, either economically nor strategically, because supply chains still need alternatives to what we can produce here.
Yeah, and that was always like the difficulty that the Trump administration was having in defending the tariff scheme, because it was clear that some of the tariffs were imposed to protect like strategic American industries, right? Like Ford and GM don't want $8,000 Chinese electric vehicles being dumped into the U.S., right?
Yeah.
And it makes sense to tariff that. But when that was coupled with tariffs against like Colombian coffee and commodities,
Or chocolate,
commodities
as an
that we
example.
aren't going to bring into the U.S., it was clear that like, okay, that must be about a different issue. And it was hard to really defend the tariff program as a whole because it was at cross purposes with itself. But this to me, this brings a lot of clarity, and it seems like the stock market in the U.S. at least.
I mean, we're up.
It's responding
Dow
really well.
Jones is up 2,100 points. The Nasdaq was up 1,200 points, and the S&P
500.
and this is 148 Eastern. I believe this may even be 20 minutes delayed. The Apple app isn't real-time market data. But I mean, you look at it, the Nasdaq's up 9%, S&P's up 7%.
Yeah.
I mean, we're talking about a massive, both short covering that probably took place, but also just massive surge. I think what we've all been wanting over the last couple of weeks is some sense that there was the ability to negotiate these tariffs and that the administration was willing to do that. The fact that they have been so staunchly against allowing for short-term negotiations was, I think, very scary for a lot of businesses, very scary for the American consumer because it meant we didn't know what was happening. This is the biggest change in trade in really modern history or recent history.
Probably since the year 2000 when China entered the WTO.
Yeah, but even
this is like a reversal of trend.
But even more so because it's almost reversing the post World War II world where free trade was a constant. We were trying to make markets freer for U.S. goods, and really what we've seen is when you start putting tariffs on every single country and saying we're going to go it alone, that's a message that the entire trading system is done for or is not. And so now we're in a position where at least all of the attention is on that China trade.
Right.
And this is going to be interesting because I have a theory that the Trump administration, as part of these negotiations, is not only going to look at the tariffs, the value-added taxes, these indirect obstructions to trade, they're also likely to look at the trading relationship between these countries and China itself. Because if you really want to box China out, it's not just cutting off trade. The United States is 15% of the China trade. So 15 of Chinese exports, 15% go to the United States. If you really want to place an enormous amount of pressure on China, you want to look at the allies that we have. That would be places like Vietnam, which is receiving a lot of product that is actually just nothing more than border skipping. You want to look at Japan. You want to look at South Korea. Obviously, we'll put Europe aside because that's an entirely different level of contentiousness. The UK, you want to look at Canada and Mexico have been massive recipients of Chinese imports. And so I think if advising the administration, then what I would say is the policy should be.
You have to go deeper into like the freight flows and the provenance of these goods.
Correct. I want to make sure that China does not have the ability to bypass our tariff regime on China and box it out. And the other thing is these other countries, particularly Vietnam and Mexico, these really low-cost manufacturing centers, it is in their interest to actually cut China out of their markets, predominantly because what's happening is they're also receiving, Mexico has had this problem, is Chinese goods are being dumped. Cheap Chinese goods are being dumped into Mexico and actually crowding out their industry. And so there is an opportunity to reset the way we work with China and the way the world does if this is handled appropriately. And I don't know, again, I'm not close to the administration. I don't have direct conversations with anyone that's in that direct circle that's in these meetings. But I have to wonder how much of this decision was related to the stock market, did to the 10-year, we saw the 10-year overnight really corrected itself.
Yeah.
Or so how much of it was like real-time market data and perhaps feedback from allies, or was always planned that it would be very typical of what Donald Trump has been credited with is the art of the deal.
I was about to say, I wouldn't be surprised if all of this was in his book.
which is kind of insane when you think about like it's an. I mean,
What's
insane.
What's
not
amazing is
because
that this was written, 25 years ago or whatever. But when the playbook is run in real time, it's just as shocking as ever.
Because you don't know, and I think the art of the deal is clearly like if this is the art of the deal, and maybe what we won't know ever, it does. It has actually worked because what's happened over the last 2 weeks is we've had this massive, massive trade down of the stock market. We've had oil prices have relatively collapsed.
Yeah.
You're starting to put oil's starting to get to a price point where U.S. producers are actually in an enormous amount of distress. The 10-year has gone, looks like it was collapsing, now it's surging, and it strikes me as just so, we don't know. The nice thing is we have a 90-day reprieve, and I think what we'll get is an enormous amount of announcements in that period of time where the allied countries like Japan, South Korea, perhaps Canada and Mexico, will come in with huge announcements.
And hopefully, even the EU. I mean, their last retaliatory tariffs, they don't take effect until the 15th.
Yeah.
And that was like.
Well, they would. My guess is the EU will withdraw what they threatened. I actually think the only country that is not going to withdraw is going to be China. And the reason that China is not going to withdraw is because she does not want to lose face. And clearly these tariffs are directed at China. 125% tariffs on China. I think this is
a wild time.
As a supply chain analyst, this is the best news possible that could happen today. I mean, this is an amazing news story.
It's an amazing news story. It's historic not only just for sort of like Trump's like signature style of like running the country, but also in just like supply chain history. Say you're in like business school and you're running like some sort of like supply chain simulator, right? Like, and you try to enter in the value of like, oh, what happens if we put 125% tariffs on China? Like the simulator would be like, no, you can't. That value is too high.
You can't put 3 digits in there.
Yeah,
I used to play a game called Cyber. Gosh, I can't remember that. It was Shadow President was the name of the game, and the idea was that you were the president of the United States. And you could do things like trade policy. You could do things like go to war. I used to go to war with Canada because I could, like in a day, I could take them over. I used to nuke Canada in the game because it was like, who would do that? And Greenland, I actually used to. But the thing that in that game, you would cut taxes and you would significantly raise tariffs. It's actually the Donald Trump playbook played out. And then all of a sudden you had a massive like growth would instill because of the way the game was programmed. But what has been really concerning over the last couple of weeks is the fact that these global tariffs did not seem to have an end game. And we didn't know what would actually happen.
Right, like
and I
the
think
U.S. versus the world is not tenable.
I think in some ways, if this was planned, everyone was, even the Republicans that were in Congress were completely, I think in order to actually make the play work, he had to actually implement them.
Yeah.
Because everyone was expecting to get withdrawn. And so it's quite possible that this was part of the playbook.
Yeah, trust the plan. So one of the things that I wanted to talk about specifically with regard to China is the ocean container bookings data, right? So we have seen, FreightWaves Sonar has a bunch of different indexes regarding ocean container data.
Yep.
We collect the data both, at the customs level, right? So after it hits U.S. shores and is checked in by our Customs and Border Patrol, we get it at the point of departure. We also get it at the point of booking, right?
Yep.
So when the ocean container is booked, right now lead times globally are at about 9 days.
So before they end up leaving the port.
Before the vessel departs.
So to be very clear, this is tracking bookings.
Bookings, yep.
At the origin country. So we're looking at containers that are booked in China, Vietnam, South Korea, India, et cetera, and looking at what's bound for the United States. Right. This isn't, so many people get caught up in the customs clearing data. It's like what's cleared. This is actually a look at the point of bookings, which is on the front end.
It's a much leading indicator. So you can think of this as 30 days from American shores,
Yep.
given like say 9 days until sailing and then 21 days across the ocean. We are seeing significant degradation in China to U.S. container bookings. It's dropped a lot since peaking around March 19th.
Okay.
And now it's down to actually a level that's like 25% below where it was in 2024.
Okay,
so talking about just on the day, right?
Yeah,
The
so
daily
25.
bookings.
So we've seen a 25% drawdown in international container bookings
From China to
the United
US.
States.
From all ports globally to the U.S., it's much softer. It's still a softening, and like lower volumes, but not nearly to that extent.
I mean, this is a very sharp drop. It looks like a holiday. I mean, it looks like one of the Chinese holidays, whether it's Golden Week or even New Year's.
Normally what happens, you see that really big drop in January. That's the Lunar New Year. Typically what happens throughout the course of the year is that volumes from China to the U.S. will gradually build all the way through basically September and peak there. But you can see that it didn't, it basically peaked in March. It's getting pulled back down. That's clearly from the tariffs. So that's certainly interesting. The other thing with regard to China I wanted to mention is that this morning Walmart issued like an investor update. They were calling for 3 to 4% net sales growth in fiscal year 2026. They're on the fiscal year, but they withdrew their guidance today because of tariff uncertainty. Although they did say, and I thought this was the most interesting part of the call that Doug McMillon, the CEO, did with investors. He said that basically there's no scenario in which Walmart doesn't come out of this with bigger share and like a stronger business. And to me, like when I heard that, I immediately thought of Temu and Shine and sort of Walmart's low-cost competitors being completely cut out of the U.S. By these extremely harsh tariffs against Chinese
Yeah, I mean, you think naturally that Walmart would have an enormous amount of exposure. But what I think this is a testament to is Walmart's confidence in their global sourcing operations and their ability to respond. They also have an enormous amount of leverage over Chinese suppliers.
And they've been moving stuff out of China for a long time. They said, I believe it was the CFO, John David Rainey, who said that 2/3 of what Walmart sells in the U.S. is grown, made, or assembled in the U.S. The remaining 1/3, of course, is dominated by China and Mexico.
A lot of it's grocery, though. I mean, the thing to keep in mind is exception of seafood, we receive very little in terms of grocery or food products from China.
Right.
Seafood's the only real exception.
They're a massive food importer.
Yeah, so they import a lot of food. They don't export food largely to the United States. They do, seafood is an exception, largely because they have almost unconstrained fishing, illegal fisheries and things like that. They are known for.
Those big electric nets, they scrape the bottom of the fish.
It's just, I mean, and they're if you go through a lot of these Asian countries, they're notorious for just wrecking the marine ecosystem.
Yeah.
And so they are not, but that's also one of the reasons we receive an enormous amount of seafood imports from China, because they have such a low cost of production, of producing these fish products. One thing you mentioned Temu and Shein. Overnight we had, this is happening so fast. And what is so amazing about how fast it's happening is that there's people that are in this business oftentimes have disagreements. And because there are so many announcements for the White House, there's so many different just news reports. I can't remember, FreightWaves has been around for now 8 years. I don't remember a single time that it's been as busy of the types of news that's just happening all at once at this level that matters at this scale. This is definitely the business. But one thing that came out overnight was the updates to the de minimis policy, which now effective May 1st, is a $75 per postal package for anything coming from China or Hong Kong. It's a $75 fee, tariff, if you will. Minimum, and then it goes to $150 on June 1st. Is basically this ratcheting of trying to cut off Temu and Shein, Alibaba, even Amazon has had some sourcing. eBay has sourcing of these small DCC merchants. That is basically the Trump administration saying no more. That's the message that they have there.
That's fascinating. And that's, I mean, so by June 1st, a lot of those business models are toast.
Yeah, I mean, it's interesting.
At least for some many product categories.
I would say the products that, the way that these businesses were operating is toast. I think these businesses are so big. I mean, people don't realize how big Temu and Shein are relative to
Alibaba.
I mean, these businesses are huge, huge, huge companies. They have
footholds into the U.S., but it's not necessarily.
They also have the data. They have the audiences. They have the sourcing operations. They have started to diversify their sourcing away from. I wouldn't say away from China, but they have the ability to go source in other parts of the world. They're also going to be bringing in bulk containers. You know, their product costs are, say, 70% less than what U.S. suppliers are getting. So they have some enormous advantages that really are, frankly, more enhanced than what their U.S. competitors. So I think what will happen is those companies are going to build infrastructure in the United States. It's already happening. They've been having physical locations. They did this originally in Mexico, and then Mexico cut off the de minimis exemption. And what's interesting, this happened over the holidays. The reason the president of Mexico did it wasn't to help the United States. She did it because of the pressure, the competition of her own industry against Mexican companies. And I think what happened is it was a sign that Mexico was willing to basically say, China's a problem, not only in the United States, it's a problem in our country. And she effectively cut it off. So
she's like basically buying into the logic, like buying into Trump's logic with regard to China.
But as it relates to her
that's what I'm saying.
And her own economy. The other thing that I think we're picking up is that logistics infrastructure investments. One of the things I've heard over the last day or so is that there's been an enormous interest and levels of activity of Chinese companies in manufacturing, in retail, that are looking for U.S. logistics infrastructure investments to bring logistics infrastructure here. And it may not just be sourcing products from China, it's also could be sourcing products from other parts of the world. I mean, is
this just about like storage capacity for inventory,
or
is it about?
But it's also I don't know that they would be manufacturing, but I do think that some of these Chinese companies have such great scale. This is a story that's been playing out a lot in Chinese economic. Is the government and these entities, these manufacturers and retailers, have been sourcing and bringing. So there's a big accusation, and it's very true, that a lot of what Vietnam's exports are products that were manufactured in China. That's true. But what we've also seen in recent years is that Chinese companies have been manufacturing products in other parts of Asia and in Mexico, have been building manufacturing plants to source products because they know how to build, they have the expertise, and they're basically taking that model that was brought to them by, they took the expertise from the West, United States and Europe, UK, et cetera, even Japan, took it and started to build manufacturing there, and they're now going to these other parts of Asia.
It's almost like the first Chinese multinationals.
Yeah, and so the Chinese government is not stopping them because they want to get rid of the low-end manufacturing. Like for them, they want to upgrade their manufacturing to more advanced products. And that's why we've seen Vietnam just explode. It is not just border skipping. That is absolutely happening. But there have been substantial amounts of manufacturing investment that Chinese companies have made as part of their growth.
And they sort of have, their risk sort of calculus may overlap a lot with Xi's, but it's not identical to it, right? Like a Chinese company has its own sort of interest to look out for.
At the end of the day, the day has come. We've all known that there would be a moment where, particularly with the inevitability of China and the United States, just the rise of China, they are well aware that at some point, and they've been thinking about this a lot longer than we have, that they would be in competition with the United States, that there would be an ultimate level of geopolitical friction that would actually become very hot. Now, whether it ends up in a actual hot war, it does end up in this economic war that we're seeing right now. We're in the middle of it. I mean, it has started years ago, but like this is a
Major
really
escalation.
important climatic moment in this war. Let's hope it doesn't turn hot into missiles firing. That would be catastrophic. Let's hope that this is as far as it goes. This is a Cold War fought in that. In fact, one of our folks who works on our team was telling me that one of the Call of Duties actually constructed this story where there was the game starts with tariffs on China and the United States and then ends up in a hot war. This could easily boil over. Let's hope it doesn't happen. But I think that's the reason is that China needs U.S. dollars continuing to flow into its country, largely to prop up. It has to buy oil, it has to buy food products, it has to buy imported products to feed its people, and it needs dollars to do that. And so that is one of the reasons that these Chinese companies have set up shop in these other countries.
That makes sense. Well, there's some freight data we can look at. We can pull up OTVI, the outbound tender volume index. This is basically just like raw truckload volumes, truckload shipments being electronically tendered from shippers to carriers.
So the white line is 2025.
Yeah.
So that pink line is actually 2023. There's two. It's bluish green. The top green is 2022. That was really sort of coming off of COVID.
Right.
The green right above the white and pink line is actually last year. So we've seen a drawdown in volumes. We've seen, and this has really been playing since Valentine's Day. Valentine's Day was really the time when we started to see the conversation around tariffs happen. This is really the attacks were on Mexico and Canada. There's a lot of attention there. That's when a lot of the volume started to really lag. Was right after the inauguration. We saw Donald Trump put tariffs off the end of January, and really this message started to heat up around February. Remember, we had the fentanyl tariffs that started the whole thing. The freight volume is dropping off. I think one of the interesting things is that while volumes have dropped off, we've seen the flatbed market go hyperbolic.
Yeah.
That has been on fire. And then in recent days—
Is that due to what, lumber mostly?
A lot of it's lumber and steel that was shifted before the tariffs went into effect. And I think a lot of just trying to get as much inventory into the country as possible. Even where you may have tariffs, I think everyone's been worried. And we've seen escalation. I mean, look, we've seen 2 days ago, Chinese tariffs were 54%. We're now at 125%, and that is this escalation. And look, it's not going to stop. Tonight, I do suspect that we'll get an announcement from China where they've done something else. We're going to see this tit for tat going on, and at some point, it's probably going to go beyond the tariff percentages, because at some point, 120 going from 125 to 200 is going to make a huge difference, but still, it's going to be at some point you're not trading with them at all.
Yeah.
Then it's going to be what happens where, is there a visa cancellation policy? The State Department updated a rule that you're not allowed to have romantic relationships with Chinese nationals, sexual or romantic dating relationships with Chinese nationals.
Oh, for
U.S.
State
anybody who works for the
Department?
government is not allowed to. And so, these are the types of things that happen. China's threatened our finance, like our banking system.
I know they put sanctions on a number of U.S. companies.
Yeah, and so this is what we're going to see, and this is going to continue to play out. So we talked about volume. Volumes are certainly more sluggish than they have been, but let's pull up the truckload rates, because truckload rates have actually started to trend up in recent days. So that white line is just we're going out of pattern. It has been following. It's been higher, but been following the same direction as what we had in last year and the year before. Again, that big green line is back in 22. But we're starting to see that break out. A lot of that's just spot demand, largely, flatbed has been driving some of that. But we are seeing some increase in spot rates.
Yeah, they moved up in the past week. Tender rejections are still above 6% out of sluggish, kind of soft volume, in a soft volume context, which is encouraging.
Look, I think when you have softer volumes, but you have still steady tender rejections, in the 6%, and a breakout from where we were last year. I don't know if we've got tender rejections in the back. If production could show us that, that'd be great. But if you look at tender rejection levels of where they, with the soft volume, would expect tender rejections lower, they're actually trending quite positively.
Yeah, it's telling you that, I mean, to me, it's telling me that like the market is, a lot of capacity did come out of the market. It's primed to go upward in response to something good happening. We're just waiting for something good to happen, right?
I mean, look, I think the fact that it's above 6% in these declining volumes is just telling us that the market is largely in balance.
Yeah.
Is like it's reacting, and it's quite volatile. The number is incredibly volatile. It's not, and so I think what it's telling us is that there is some substantial. The market has come back in balance much more so than it had been the last couple of years, and I think it's a real positive sign. Now, I don't know what's going to happen. I'm looking here at my app. The Dow Jones is up 2,600 points as we speak right now. S&P is up 8%.
Whoa.
This is massive short covering in addition to just buying. I bet a lot of it is actually short covering more so than anything, because I think a lot of people are net short with these tariffs. But we're seeing the market rally. NASDAQ is up 10%. I mean, we're talking about substantial. How much? I mean, I have to go back and look at the chart.
How much you're off the
if we had a multi-month
Yeah, can you
chart,
go back to, can you show the 1 month NASDAQ?
we're still about half of, like, we've not made up, we made up about 25% of where we started. So there's still a lot of room to go.
Yeah.
I think a lot of it, I mean, as fast as it moved, is probably a lot of short covering.
And there's still a lot of uncertainty. There's still a lot of wait and see how, what China's going to do. I think that's, the sundering of the trade relationship between the world's largest two economies, will have so many unpredictable effects like downstream that I think, the market's going to be, it's ripping today. It may not retake its high because
it's probably not. I mean, costs are definitely going to be higher for certain product categories. I think it's very, very clear that the bilateral trade between China and the United States is fraying, and it is unlikely to ever get back to what it once was, or what it was last week, because we've now moved beyond, like, it is going to be very hard to reverse.
Yeah.
China has their own view. And look, in fairness to the Trump administration, they're right on what they're doing. I mean, China has been funding its military, its spying operations, its theft of intellectual property. It has been destroying American industry and ripping us off for decades. And now, this has been, in my opinion, way too fast and way too high in terms of tariff levels to make it, it's going to create a lot of pain. I do applaud the administration for giving everyone an out in some ways, of finding that there are other countries that we at least have some time to get to where we want them to be. But the bilateral trade with China and the United States is over with. And the question is, what happens with every other country? Because if all of a sudden China gets boxed out of the other parts of the world, because now they're going to have effectively probably 8% of their, if they're exporting 15% to the United States, and let's say it's a drawdown of 50%, that means they're going to have 7.5%. Like, the number 2 importing nation from China is 4%.
Yeah.
So they cannot replace the United States. So they're going to have all these products that they're going to want to dump on other countries because they simply
The question
can't
is, like,
do
whether the EU will let them.
The EU is going to try to block them out,
whether
too.
Brazil will let them.
All these countries are going to see that, because what's going to happen is that the Chinese are going to have no choice but probably to depreciate their currency. And in doing so, it makes their products cheaper. So now they're going to try to dump a lot of these products into other countries. The question is going to be, is that allowed? And if it is allowed, it's going to put more and more economic pressure on China, which I think is a positive thing, because they cannot fund their military operations.
Yeah. I mean, it can. as long as they have a way out, it's positive, right? Like you don't want to box them in so tightly that they feel like that.
No, Sun Tzu would actually say you never
desperate.
corner your enemy. Yeah. Like there's a whole theory in Art of War, and Sun Tzu has this thing of like, and this is really the Chinese playbook, is like you know, you can win the war without fighting the battle, kind of thing. But one of the sort of Sun Tzu's lessons is never corner your enemy. Right. Because if your enemy has nothing to lose, they'll destroy you.
Yeah.
But exactly. You always give your enemy an out.
It's about chasing them in the direction you want them to go, not giving them zero options and continuing to apply pressure.
Options. They have options now, but the question is how much pressure does the Trump administration, like in some ways the Trump administration, you know, if I were, again, advising the Trump administration, it might be in the United States' interest to have these products dumped on Europe because the EU is our other economic rival. Like in some ways, let the pressure go to Europe and not to the US. And
I mean, let them deal with it. Yeah.
Let them contend with it. It is very clear that the Trump administration does not view NATO and the EU alliance as a friend,
or as like a sort of an essential, fundamental ally.
Yeah, like I think they view them as a
conditional ally.
Correct, and I think in some ways, letting clearly Japan, South Korea, Vietnam, Australia, those are really, even Mexico and Canada are really important to the United States. It is not to say Europe isn't, but Europe's interest and the U.S. interest often diverge.
Right.
And so if you're thinking about how do we game this out, letting Europe contend with China's threats is probably
It'll be interesting to see how they realign and if Europe puts up with what China will want to do or not.
That's interesting. I mean, supply chain is in the front lines of the second Cold War. This is going to be an astounding, interesting story. The news is frantic, but we'll keep everyone. Please tune in to FreightWaves for more updates. I think there's a dozen stories today alone. They're happening fast and furious. In fact, so many more stories that are coming to us. We simply just don't have time to post because they're happening so quickly and things are happening so fast. But we will keep you updated. Obviously, JP and I both have strong X accounts as well as Dooner, so you could tune in there, and we'll keep you updated.